Welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's weekend show, our Broiler Chicken Show. Back. Why do we call it Broiler Chickens? I don't know. Sounds like a fun name. I used to be a prop trader. In fact, I used to be a commodities broker years ago. And they always used to try and launch the broiler chickens futures contracts. You know, they got live hogs, lean hogs, but pork bellies, live cattle, feeder cattle. And they kept trying to list the broiler chickens contract, but they could never get the public interested in trading broiler chickens. Anyways, I always found that amusing. Whenever I have fun, I always, doing these videos, I always make reference to my old commodities days and life of a commodities trader, I suppose. Anyway, so welcome back to the frivolity. 11 o'clock here on the wet coast, 7th of January, 2024. A bit of a muted market, actually. Past week, actually, we put out Chris and I got together and did our newsletter. Actually, I don't even think I have it off of this page. I have it on a different page. Did you actually send me the sort of polished copy of the newsletter, Chris? I don't know whether. Yeah, okay. Let's see what we got here. There it is. All right, so this is what we should probably talk about or off of today. Unfortunately, our CTO is a bit sick there through the holiday period, so our website is a little bit splotchy. He seems to be getting stuff back up and running again, data-wise. Notice the breadth of the market, the crypto breadth is starting to roll over here in earnest. And actually, I've been noticing recently, if we look at the things like the total, it's probably a pretty good proxy on the broader crypto market. You know, I think we'll probably get into this more in earnest in a few minutes. But as you can see, we do things like a reload zones. We're getting a little bit nosebleedy here, folks. And as I've kind of talked to you guys in the past recently, especially in the free videos, we all know that at any given point in time, you should expect things like 38.2 retracements. There's a bit of risk built into the price here. If anything, it's getting a little bothersome because I don't think a lot of people realize. I mean, basically, this crypto market has gone straight up for one full year. So, you can't make the argument we're actually cheap anymore. If anything, you'd probably start making the argument that things like 50% retracements, WD GAN, just keep it simple, stupid, they're probably a bit overdue, In fact, Mr. Gann would just simply say you take whatever the duration is, and the fact that this is one full calendar year, I don't think that's an accident. But one full calendar year, divide that by 2, 6 months. I think that's probably, a weird sort of way that the WD GAN kind of thinking, here, let's make this so you can see it. The low to the high there, 400 bars. If this is the top, and I don't know, I might swim around here a bit more. Mr. Gann would simply say you take that number and divide by 2. We already can see where the 50% level for price is. And what should happen is about 50% of the time. So that was 408 bars. So that would be like 204 bars, somewhere in that area. something like that. And that would put us middle of the summer. We finally do half decent correction, clean up all of this excess. Again, is this the top? I don't know. There is no actual sell signal here yet. We might even be doing something along these lines. You get like one more push up, and then we go through the correction process. But all you gnarly veteran traders, and you know who you are, you should all be looking at this and just going, you know what, this is awfully one directional. Maybe we could use a bit of backfilling here. So I'd keep that in the back of your mind. Also, too, what I've noticed of late is, and this is typical. I mean, I hate to say it, but there's a lot of very typical what I see going on in the market right now. Our newsletter kind of highlighted. I get the impression that, I mean, keep in mind, and people have actually joked about this in the past, but I think it's perfectly apt. The market is a crack whore, or maybe she's not a whore. I don't know. Maybe he, right? Houseplant, whatever. It's, I guess, gender neutral. Doesn't really care. But it's a crack addict. It just is. If you want higher prices in your stocks, that means there needs to be more liquidity pumped into the system, right? More money to buy and to prop stuff up. I'll try and refrain from swearing. And of course, we've seen how the market has acted here over the past few years. I mean, especially since that 2019, 2020 fiasco, the sickness. What a joke. There's probably the best place to show you this. I don't really need to see a futures chart. That was a fun little short that I was walking the site through. But if we look at just, the S&P 500 depository receipt, right? The spider. There's your sickness bottom there. And what a great example, right? Quite literally, I was telling everybody in the public, and it just pissed me off because nobody would listen, that Wall Street was just selling ridiculous amounts of stock right in this window. All the insiders were all bailing. Amazon, we kept posting day after day after day about Jeff Bezos selling. This was the January options expiry right in here. Right, see where it says January, February. So right in here, actually, there was just a massive amount of transfer of wealth from, say, the 1% into the public's hands through the auto exercise of call options. And of course, the public went and bought tons and tons of calls here because they just thought this thing was just going to keep going up endlessly. And of course, you all, hindsight 2020, we all know what happened. I mean, the sad part about this is this was like basically 2019. This is, I've told you guys repeatedly, usually what happens in our society is recessions happen in years that end in 8s, 9s, 0s, 1s, and 2s. This was a really interesting one because we really didn't get the recession that we were supposed to get. It was like a flash recession. And then all of a sudden, mysteriously, out of nowhere, the market got all the liquidity it could ever dream of. And a guy who was basically a lawyer by trade, now turned bankster, just came out and said, I'm going to take interest rates to 0. Is that irresponsible? Who knows? I'm the shit, man. You can't get in front of my face. Whatever I say goes. And there is the end result of taking interest rates to 0. I mean, just stupid, irresponsible, economically just a train wreck. The only problem here is, was this pre-planned? Is this all about this great reset and how we had to hyperinflate the economy to justify the debt levels that the baby boomer generation racked up here, especially through like Junior Bush's days. Because keep in mind, ironically enough, most of this is actually just the reaction of the response to Junior Bush's absolute destruction of the US economy from here to here, $1 trillion wars for no reason whatsoever. The housing debacle, the way that the financial services industry securitized the housing industry, and it just turned into an absolute train wreck. And of course, I know the solution is let's just go and give all the banks all the money they want. Woo! Up goes the market. Of course, now we're in our hyperinflationary world. The irony of it all is if we actually look at this, take out all the money dilution, all that crack addict shit I just talked about a moment ago. And well, mysteriously, you find that actually we really haven't gone anywhere, have we? Ironically enough, you could make the argument, Junior Bush and all that, corruption, right? There is September 2001, right there. And you could actually make the argument that we're just now that they've gone through all this great reset and all that bullshit, we're just now actually getting back to the levels of where we were then. Isn't that remarkable? Basically, like basically 20 years, 2 decades lost. And now when you go to McDonald's, your Big Mac costs you 18 fucking US dollars. Whereas I used to joke, in fact, actually, I teach in the education program here in the 1990s, of course, all through this. I used to go to Subway and get my 6-inch tuna on cheese for $2.75. Now that same 6-inch tuna on cheese, I think like literally it's $10 Canadian. So, the irony of it all is, people, and the sad part about it is people in the public, they don't see this image. They only see this image. Oh, look how wonderful life is. Look how high the stock market is. We all must be rich. Woo! Look at us. We're so fucking awesome. Yeah. Oh, well. Anyway. So, it's interesting how through the facade of that whole sickness nonsense, they just justified printing. It's fascinating how when we got to about here, because keep in mind, when we were down here, Mr. Powell basically said that the only thing that he really wanted was for the economy to get back to where it was prior to the sickness. And then right in here, this is where all the socialist politicians all just went absolutely apeshit with just runaway spending. And that's what caused this inflationary, we as of this point, we went into this hyperinflationary environment. And of course, it was through this, I got the economy back to where it was. And then all the socialists come in like crazy. And of course, in my country, don't get me started. I mean, the guy has like literally doubled the national debt in just this window. I mean, what the fuck? What an asshole. He literally has destroyed the credibility of our country in the marketplace. And nobody gives a shit. Nobody gives a flying fuck. And it just makes you so angry. Anyway, doesn't matter. So through this window here, of course, the banksters say, look, we just wanted to get the economy back to where it was. Now all you socialists have gone and just, created hyperinflation, spending money you don't have, deficits just absolutely staggeringly high. That's obviously going to be inflationary. So now we have to normalize interest rates and get them back up to sort of quote unquote normal levels. I might actually make the argument, and what I often talk about with the site people is that I think through these Jupiter Saturn crosses, and it's basically like a once every 80-year event. Probably the best way to show you is my stock market breadth. I like to follow the TIPS versus the TLTs, which I think is a really good market-based proxy for inflation and deflation. I would hopefully you've all learned, do not listen to any of these politicians. Do not listen to any of these government bureaucrats about what's going to happen in our society and our economy going forward. Just don't do it. It's a waste of your time, and unfortunately they are usually politically motivated. So terrible for your pocketbook, right? Great for politics, but just terrible for your pocketbook. The education program, basically the message was into this very significant celestial event. Like I said, this is like 80-year cycles. But we just went through a very, very significant pivot. Think of almost like the Jupiter Saturn cross as like just a big stopwatch that's running in the sky. I think to a certain degree, the gravitational effect of all of the planets all lining up in a row really does mess with us humans, the actual living species on these planets. Probably even on the moons of Jupiter and Saturn, there's life forms there that get affected by all of this. There might even be life out in Neptune and Uranus and stuff that we're just not even aware of. But regardless of that, the point here is that I think we went through a very, very significant historical shift. And this basically was like this last relationship pivoted through the last time we went through a Jupiter Saturn cross, the dot-com boom, the 2000 peak. This particular cycle cross was all about hard assets, right? The Jupiter Saturn cross in 2000, and just in case you're not aware of it, it's pretty easy to see if you look at something like the NASDAQ. NASDAQ, the stock market for the next 100 years. I'm not quite sure. Maybe, I don't even know if we can do it off of these. These are all like, I want to see is like a NASDAQ chart going back like 100 years, but that almost doesn't exist. NASDAQ, anyway, let's see what happens when we get that. Is that going to give us a chart we can use? There we go. So you can see there was the dot-com boom peak, and this was a Jupiter Saturn cross right here. What do you think? Not a pretty significant celestial event? I'd say so. This was all about growth is endless. This was all about low inflation. Now, sadly, of course, now we have to go through probably 40 years of rising inflation, falling bond prices. So like if we look at something like the US interest rate market, see how far back this goes. Yeah. So this actually is probably a better tool for you to understand that inflation deflation gauge. So this also too was a Jupiter Saturn cross. So here was the midpoint of that cycle. That was Jupiter Saturn cross. That was the greed cycle pivot. And you could make the argument, I don't know whether you can see this or not, but in essence, this is one big ass sine wave. Goes like that. So there's your sort of I guess 40-year interest rate cycle, where this is basically a falling interest rate environment. Now, unfortunately, and in fact, you might even, that'd be kind of fun to do this. I don't know whether this will work or not. But you could go, say, from here down to here, and then we'll flip this around. Boom, there we go. So that's basically what the next 40 years will look like interest rate wise. not bad. Maybe we got a little bit ahead of ourselves. And interestingly enough, too, right? This would make sense because I don't think that the market itself anticipated these insane socialists just going fucking crazy in our society. So I think that this latest push up higher here, and these are yields. This is purely a function of the overreaction by the feds, the politicians, the baby boomers, and all that crap. Them overdoing it. I think they spent way too much money that they don't have, which was hyperinflationary, and as a result, bond yields probably went a little bit too far. But I wouldn't be surprised if this is base. Actually, that's not a bad image for you to all keep in mind. And I've been sort of counseling people this, that we should through 2035, right? That should be, and if you can kind of think about it, this was our respective fear cycle there. This was our respective greed cycle there. I mean, it's obviously not the best pictures. Not very good drawing. You get the idea. 2000, where's 2000? So actually, and really, this was supposed to be right in here. So to the end of 2017, beginning of 2018, that's when the cycle was supposed to shift. But of course, we had that wonderful gift of the sickness and Jupiter Saturn crosses and all that crap. But I think that we're probably going to do something like that into that pivot. And I mean, I don't know whether you can see this or not, but hopefully you can see that we actually move in relatively equal sort of spats. You could make the argument. In fact, I remember specifically there was a guy, can't remember what his name was, but there was a guy in 1998. I remember in the fall of 1998, right in here, that was running around the stock market floor. I remember I'm on the NYSE going, 98, this is the cycle pivot, this is the cycle pivot. And of course, that year was when we had long-term capital management go under. And it's so ironic that the long-term capital management was a bit of a shock to the market. Nobody was really expecting that, but there was one house that they were going to sort of bail out long-term capital management, LTCM, and there was one house that wouldn't play ball, and as a result, long-term capital management went under because this one brokerage house would not cut them any slack. Does anybody know what that brokerage house was? It's an interesting twist in fate. And it just goes to show, you screw somebody over in the marketplace, and they will remember it, and they will come back to haunt you. So does anybody remember what was it? This is an interesting trivia question for you, Al, and I'd be willing to bet 90% of market participants don't know the answer to this. I'd be interested to see if anybody, and I've told you guys repeatedly, but I don't know whether any of you guys ever listen to me. Oh, look at that. TBG says, is TRI doing commercials on YouTube now? I just logged on to the show and on YouTube, and they made me watch a fucking commercial. Let me guess, for Joey Diamond's bank. I bet you that's what you had to, or you had to watch a commercial for what's the ETF dickhead we all hate? What's that guy's name? BlackRock Capital jerk. Anyway, probably have to watch a commercial for him, eh? Sure. We probably should move this whole damn platform over to Rumble and just say to hell with YouTube. I think they're still surviving. I don't think they're doing very well, but it's interesting how our whole society has bought into this whole YouTube thing and really is not interested in any competitor. Anyway, back to our conversation here. So does anybody remember what's our trivia question? This is a really good lesson for all of you. Female crack addicts that sell their body for crack is called a strawberry. Oh, I did not know that. Yeah, I learn something new every day. I remember that season of selling from those major companies. It snowed in Wisconsin all day yesterday. Okay, well, that's good to know. Are you in Wisconsin, TBG? Geez, you're chatting up a storm here today. Yeah, but come on. We all know when it started snowing, TBG. That's cheating. Hey, Andrea, got it right. Very good. One person answered my question. Yeah. So it turns out that long-term capital management was going to go under. Lehman had a bunch of their paper. Lehman wouldn't play ball. And what happened the next cycle? Did they set Lehman up for a fall there into 2007, 2008 for out of revenge? It wouldn't surprise me. But basically, Lehman wouldn't play ball with long-term capital management. So next cycle, they set Lehman up for a fall, and nobody would come and help Lehman out. So it just goes to show, karma is karma is karma. So Brian, make damn sure to try and help as many people in this world as possible, because there will come a time when you need other people's help. And if you don't help people, unequivocal, if you don't, give without reservation, then when you need help from the universe is just going to turn around and go, fuck you. I tell you, that's Lehman Brothers is a really, really good lesson for every single one of you. A really, really good lesson. And I hate to say it, you always get into a lot of trouble whenever you go down these roads, especially with considering how our society is structured and who's sort of driving the bus. But who is in charge of Lehman Brothers? I'm not even going to finish the rest of that thought. You should all be able to read my mind and know exactly where that conversation is going, because you're not even allowed to have that conversation in our society, which is really bad. No such thing as free speech in this world. Anyway. All right. Well, anyway, so the point here is I think we're just going through very normal cycles. The irony of it all, those people that are actually sort of saying, where is the end of this move? Ironically enough, it's ironically very similar to all the conversations I have with you guys about Bitcoin and crypto and assets and all that kind of stuff. So if we just simply put on a nice simple fib study over this past 20, 30 years, I mean, you guys should be able to answer this now. We've got 50 people watching this video here. So what is our knee jerk? Should always expect this. Doesn't matter what market you're interested in. This level, you should always expect the market to ratchet back to at any given point in time, anytime, anywhere. Anyone? TBG, you're so smart. So look where 38.2 is right now. I would say 38.2 is our knee jerk. Yes, 50% level. That's WD Gann. Quite often, actually, we have a guy, Collins, pump chaser, dump chaser zone. That's what he likes to call this little window here, 38.2 to 50%. Do often see that markets will come back to 38.2 and then pull back, and you go, where's the 50% level? Why didn't that happen? So sometimes that does happen, but at any given point in time, you should expect the market to do 38.2s. So just looking at this image, actually what you've seen here since this pivot actually shouldn't be a surprise to anyone. No one. Shouldn't be a surprise to anybody. But anyway. I mean, ironically enough, do you think the public would take the time to actually try and understand what the hell's going on here? I suppose the good thing about this, with it going up so far, so fast, that is technically a V bottom. our quote unquote buy signal for a market that looks like this is we want to see W's on other sides of trend lines. So there's your, primary trend line off the top. And I might make an argument that there's probably also another trend line that's working away. Boom, 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 boom. So when do we actually get a buy signal here? Well, we don't actually get a buy until we get a nice clean W on the other side of this trend line. So believe it or not, call me crazy, but I actually would not be horribly surprised to actually see. You can kind of see that the trend higher in interest rates. I think this is just like the reactionary part, because I think this market, I think the whole 2000 thing with the Jupiter Saturn cross, like I said, what I teach in the education program is this is a 35-year cycle, and we were supposed to pivot through here. And I think there is your W, right? But just where was the W on the other side of the trend line? It just never came in. Fact is that your W on the other side of the trend line, just this little dinky donk right there? Maybe. I don't know. So I guess what I'm trying to say here is at some point, we probably should expect this to actually come down and test these lows in earnest, because we don't really have a long-term W. And then notice, like, this is what I'm really looking for to actually say, all right, interest rates have officially turned, and we now must get used to the idea that interest rates are going to be trending higher, for the next 10, 20, 30, 40 years in earnest. I wouldn't be surprised, believe it or not, if there is some sort of big pullback here in yields. And if anything, I kind of like the idea. And, I'm just going to give a shout out to, I was actually pretty impressed. Chris and I were sort of going through some videos and stuff that we saw online. How do we change these video formats and stuff? And I personally like sort of Larry Williams' approach, where he has these slides and he just sort of walks through the audience. Actually, that's not what I wanted. Walks through the audience through slides, just slide after slide after slide. So I'm going to try and do this kind of formatted video, pre-recorded, just nice clean message for you based on whatever the topic is. But let's give shout outs. There is another place. Julian really likes these guys' videos. They call them the Game of Thrones or something like that, or Game of Trades. Oh, that was close. Game of Thrones. That's like a popular TV show or something. Anyway, doesn't matter. Anyway, so they sort of just verbally walk through their videos, but I'll have to say, I was actually, how do we say this? The message that they had about what were sort of the things that they were going to be looking for to mark a pivot and a change in the market. Actually, I kind of liked their thinking. I thought it was generally, it was heading in the right direction. And one of their arguments, of course, is that if bond prices are heading up, then that means interest rates are heading down, i.e. yields are falling. So in this case, what I was just showing you there a second ago, and I just want to give them a shout out, acknowledge, people. I thought it was pretty good research. It's not bad. So the point I was trying to make there, I don't know what screen I was on. I think I was on this screen, wasn't I? Is, through this window where bond yields are going up, then that means bond prices must be going down. It's kind of a hard thing to understand if you don't know the way the market works. Here are the bond prices themselves. If we change it to like a weekly chart, you can see bond prices falling. That must mean interest rates themselves are rising, right? Which is, oh, now where the hell was I? Is that over here? No. Oh, maybe I had it on the same chart. Oh yeah, I did. All right. So sorry about that. Bond price is falling. That means interest rates must be rising. And think of it just simply as investors have a choice. Let's use the long bond here. All right. There's only so much capital out there. Of course, when the Fed goes and prints money like crazy, blah, blah, blah. That changes things. The problem is what that does is that injects inflation, which of course is the bankster's tax. They just print more money without any productivity or anything being produced, and you only have so many units out there in the marketplace, and if price is priced in these units, and you print a whole bunch more money, a whole bunch more units, well, the value of a lump of gold, the value of a potato, the value of a railroad locomotive is priced in these units. If you go and just print a whole bunch of units, well, the price of the locomotive, the price of the apple, the price of the potato, the price of the lump of gold, whatever the hell you want to use, it's going to have to go up just to stay the same because they're inflating the money supply, right? You've heard me talk at length about that. So, but at any given point in time, investors have a choice. Where are they going to put whatever money that they do have? These are the prices of bonds. And like we said, over the past, 20, 30 years, this is just going back to the dot-com boom. It's interesting how they went and fucked around with this bond here. So you can't even really see that old historical relationship. I hate how these people do this. I don't think that that's an accident, what they did. They wanted the public to very clearly see this bull market and nothing prior to it. In fact, I might even make an argument. You want a technical objective to shoot for. That low is definitely a technical objective in my eyes. So, but anyway, but here in the short term, right? Bond price is falling. People got to put their money somewhere, right? They're taking money out of this asset. They must be putting it somewhere else. Where are they putting it? The answer, of course, is 2020. Whoops. Let's go here. Yeah. 2020 bottom. All right. You see the bond market top, 2020 top. It's just quite literally they're taking money out of the bond market and they're putting it into the stock market. That's all that's going on here. But the Game of Thrones, Game of Trades people, they were making the argument, and I think this makes perfect sense. This is really, really simple stuff. Don't overthink this stuff. A bond is basically government guaranteed. This is a U.S. government bond. Principal theoretically is guaranteed. Of course, that's another conversation for another day. But if you put $100 invested into this and you bought it at par, well, you should get $100 back at maturity, right? You're just loaning whoever the person is that issuing this bond, in this particular case, the U.S. government. You're just loaning them money. So this is what's called a risk-off asset, or basically, I don't want to take any risk, but I want to have my money working and I want to collect yield, right? I want to make something on my money. These guys pay you a coupon for lending them their money, right? The interest at interest, as they say. And that's your return. And then, of course, if the bond price does continue to keep moving higher, then you make capital gains. In this particular case, investors said, well, the Fed's taking interest rates to zero. So really the economy should grow. Consumers will go out and borrow lots and lots of money because interest rates are zero. They're nothing. So let's take our money out of things like government guaranteed issues. And of course, if you have short-term interest rates at zero, is that going to be inflationary? Yes. So is that going to cause like massive spending that really is not probably justified? Yes. Right. This was Druckenmiller all through this saying, you've got retail sales because interest rates are at like zero. Public is just going out and borrowing money because it doesn't cost them anything. and they're going and buying everything. And so Druckenmiller got all upset because US retail sales through here was like running 20% annual rate. 20% increase in retail sales? Yeah, that's just slightly inflationary. And of course, we all know that what inflation has done here, right? That's this whole conversation here. Room. Inflation has come roaring back here like crazy. And really, the way that you measure, as I had said there earlier, 2019, that was basically in this environment. Like I said, the Fed just wanted to get the market back, going through the crisis and all that bullshit. They just wanted to get the market back to 2019 levels, or in essence, keep in mind, if we're below zero, that's technically a deflationary environment, low inflation. The talking heads these days, they'll call it disinflation. Oh, not allowed to use the word deflation. But you can see as soon as we cross the zero line, this is our inflationary world, right? And how inflation, and like I said, you go to like just even 10, 20 years ago, typical sort of fast foods, your burger, fries, and a soft drink was maybe $5-10. Now you go to McDonald's, you want that Big Mac, fries, and a Coke, and it's like the better part of $20. Well, that's all this environment. If anything, what we really want is we want to get this back down to low inflationary environment. And interestingly enough, this is actually what should happen, because if we use the historical comparisons, think of the 1950s, but we have to get through this ugly 2020s. I've talked to you in recent broiler chicken shows about how the latter part of the 1940s, 1946, I think it's 47, 48, we probably are going to see this tick back up. The question is, do we take out those highs, or do we just M out and that's it, and that inflationary push is done? Because you remember, well, maybe you know, maybe you don't know, but ironically enough, the 1950s were actually known as a very low inflationary environment. And I have a funny feeling that's what the 2030s are going to be like. They're going to be very much like the 1950s. So if you want a historical comparison, I would make the argument that, and I've shown you this, you can see it coming. There's somebody on social media, I think their name is like Lynn Alden or something like that. And they've done a whole bunch of research and stuff, and talking about how they expect there to be an inflationary push here into the late 2020s, I guess. I would make the argument that history, of course, often rhymes. And I think that we are in the very same cycle period as the 1940s. This was the great reset for that generation, right? The Bretton Woods and all that crap that sort of set the stage. My hunch is that they're probably going to have to reestablish some sort of link to the gold standard to try and give these currencies some credibility. But you can see into the latter part of the 1940s, when they were going through exactly the same crisis, look how bad this inflation picture was. I mean, it was really ugly. So I hate to say it, but 2020s, this 80-year cycle, Jupiter, Saturn cross, all that crap, right? I have a funny feeling we're going to have a pretty nasty, nasty latter part of this decade. So according to this kind of thinking, and actually if you put a chart of this, I've seen a few people who have done charts of this. I don't know, maybe we even have a chart of it here. No, it doesn't look like it. This, unfortunately, like we all just went through an inflationary spat there, right? Think 2021, 2022, and you can see that the inflation numbers got up, in this case, double digits. This is your Big Mac going to like $20. I mean, does the Big Mac through this environment, does it have to go to like 40 US dollars for a Big Mac meal? It wouldn't surprise me, folks. Really wouldn't. This is Klaus's Great Reset. It's happening as we speak, right in front of our eyes. Probably, I think Bitcoin is actually an excellent leading indicator for all of this. I mean, when we first got involved in Bitcoin, like way back here, say, I guess 1930s kind of idea. I was joking with somebody the other day, bought our Bitcoins, like the Bitcoins that I have for Liam. I have a few Bitcoins. I bought them at like $450 a piece kind of idea. And somebody asked me, so where is Bitcoin now? And I said, oh, it's $40,000. And she just nearly fell over. And I said, that's probably nothing in comparison to what's coming. So if we do have to go through this kind of scenario, well, I actually think this very easily be your Bitcoin at $1 million a coin. It wouldn't surprise me. I know, call me crazy. Many people do. But anyway, back to our story here. So bond prices go up, yields go down. Bond prices top out. Of course, what are you supposed to think? If you ever see the market smiling at you, that's one hell of a smile. So that means yields must have to go up. That's over here, right? So the exact opposite. Yields have skyrocketed here of late. And think of this as yields, of course, have gone up. That means money's coming out of the bond market. Do we ever go in one direction forever? Not really. And if anything, given where 38.2s are and the fact that we are thinking that 27, 28, right in that area could be really bad, maybe we have to have one more push higher in yields. I wouldn't be surprised, though, that at some point there has to be a check. That's an awfully big move, And if we think of 38.2s going the other way, and things like 50% levels, even if we just hide this for the time being. You can see we're actually about halfway to 38.2s. That's interesting. There's 50% level all the way down there. You've seen a resurgence in things like the U.S. manufacturing sector, the U.S. housing industry, for that matter. Prices have come off a bit, but I see lots of talk that the home builders are just going absolutely crazy. The politicians are all barking that the solution to all of our economic woes is just simply build more houses, and that'll solve all our problems. I think they're just setting up an absolute disaster for countries like China to. But, we'll cross that bridge when we come to it. As it stands right now, the socialists are still in political power. And as long as the socialists are in political power, and I would argue it's exactly the same thing as like Junior Bush and his time in power, as long as he was in power, right? He was in power from 2000, early 2000, all the way to 2008. You notice that literally as he was being escorted out of office, the whole fugazi of his economy started to unwind. So I might make the argument, same sort of thing. Does the market believe that the socialists are done and they're going to be escorted out of office, right? The socialists came into power, I guess, right here. Here is the big buildup, this whole money printing and all that crap. If it's perceived that their tenure is over and the Republicans, and hopefully things like, and it's great to see, of course, the people that are involved in the U.S. military industry, they hate this, of course. And there is one gentleman in social media who is going out of his way, and I'm not quite sure. I have a feeling that he is politically funded, but it's remarkable to listen to him talk about how we must keep the keep in mind that every dollar that the United States and all of our Western nations, for that matter, every dollar that we spend in Ukraine is not money that we have. We are literally going and borrowing money to give to the Ukrainians to, buy the most fanciest missiles or warheads or machine guns or whatever's. And actually, I respect the fact that there are politicians down in the States that are saying, we don't have this money. This isn't money that we just have lying around that, hey, yeah, you know what, help them out. They're like literally we're destroying the fabric of our society to keep Ukrainians going here. And I hope the average US citizen understands that. I don't think anybody in my country understands the destruction that they're doing to our society every single day that they keep permitting this idiot substitute drama teacher from spending money that we don't have. We're just going deeper and deeper and deeper into debt. It makes no sense to me. So, if anything, like I said, and of course, I'm a fiscal conservative. I don't like debt. In fact, my mantra is neither a debtor nor a lender be. I don't want to lend people money because I know 9 times out of 10, they're not going to pay it back. And I don't like to borrow money. And I don't like to be an interest slave. But basically, the banksters, the way they've set up our society, our entire society is basically interest rate slaves now. And they call them golden handcuffs. Oh, that's a fancy way of saying, handcuffs are still handcuffs are still handcuffs, But anyway, so, I mean, who knows how this is all going to play out. But it is interesting to see that basically, if you think about capital flows, this would be risk on, right? And hey, let's go take a risk in the marketplace. Capital gains. Yeah, you see how that Allen guy has become like the richest guy in the world because his Tesla stock is going straight up to the moon and all that. So, I mean, I suppose from that perspective, if you can ride these people's coattails, you love this kind of stuff. But I personally don't because it's all based on borrowed money. Like I said, you want to look at what this really looks like. This actually, in reality, it looks like that. So it's not really, and if anything, this is a perfect analogy. Like I said, Powell, he said that really all I want is I want the economy to somehow get back to where were just prior to the sickness. And you tell me, has the economy actually gotten back to that level? I think right now it's kind of gone, well, maybe. I suppose technically speaking, well, that is a bullish breakout. But anyway, I guess the point that I would just make is we've come an awful long way, especially if we look at things like bond prices. I like the idea that at some point down the road here in the not too distant future, there probably should be things like 50% retracements, 38.2s. Interesting if we just draw a nice simple trend line off of these lows. Boom, boom, boom. Look how that runs right into 38.2s there. And that unfortunately means that from the yield perspective, yields, I guess on balance, if you think about the longer term perspective, I think we have to work our way up into this sort of 6 and the third level. But I have a funny feeling that we're kind of probably going to have to go like first back, then up kind of idea. That's sort of what I'm thinking happens here. So, this is the yield. If yields are falling, then that must mean bond prices are going up. There's your bond prices going up. I guess the question ultimately here is, should we be expecting this to just go on indefinitely? That is a V bottom. You can see how they bottomed and then they slowly exhausted themselves. and rolled back over. Is that sort of what we're in store here for the next little while? We just had the big jump up right up through there. Now I'm kind of thinking there's probably some backfilling that needs to be done. And I guess my general thought here is, when it comes to something like the stock market, if we do actually have to go through some backfilling here, then it probably means that we have to do some backfilling. I don't know whether it's a good idea to do it versus M2, but just looking at, the raw numbers, I wouldn't be surprised if we have to do some backfilling in here. I don't know whether I really buy that this thing is actually broken out yet. I'm still thinking this is basically a trading range. So if that's the case, this was a pretty nice move off of those October lows. And probably, like if we change this to a daily chart, notice, look at the holes on this chart. Wow, look at that. And look at that. Oh, goodness. They often say as January goes, so goes the year. And if we look at the January barometer right now, that's what this image is. January barometer, first hour of trading right out of the gate. Oh boy. Keep in mind, they gap the market violently lower right out of the gate here. But just generally speaking, that first year, what's the tone? From the upper left to the lower right, that's usually not a good sign. Then the first day, same sort of thing. That was that initial move lower. There's that first hour sort of finished on its lows. Then if we look at the full day, they did bring the market back smartly there right into the end of that first day. And I have a funny feeling that this is basically the market following the US election. So this is probably where the election is, somewhere in here. And then, ironically enough, the last time Mr. Trump won, the whole risk market just vaulted higher when the market realized that we weren't going to be rammed down our throat with 4 years of Hillary Clinton. I think the whole US economy went, oh, thank fucking God. But then we had 4 years of Trump, so I don't know about that. Anyway, we're now through the first week. Same sort of message. We opened up weak and we didn't really look back through the whole damn week. It was just one direction. So they say January barometer, as January goes, so goes the year. So I've overlaid here the first hour, right? That's in yellow. The first day, which is in teal. The first week, which is in orange. And you can see, like right out of the gate, there is that first week, right? That's what this image is, right out of there. My hunch is that the rest of January is probably going to look like an amalgamation of all of these studies. And what it really is probably saying is don't expect a hell of a lot for 2024. All right, well, that's kind of cool. So that was the whole point of all of this conversation. I'm sorry if it took me forever to get around to saying it. But just generally speaking, considering the fact that, as we said, yields have jumped up quite a bit here over the past little while. I actually think that we need to do a bit of backfilling here. Maybe you take the year 2024. If yields are going up but now are starting to come down, then that should be a risk off bet, i.e. the assets, this is the bond prices themselves. If they're moving up in price, this is a weekly chart versus what's this? Oh, that's 2 week. Well, I guess we can change this to 2 weeks just so you can see the same image. I think that this is, whoops, that's going the wrong way. This is in essence a if bond prices are going to work their way higher here, maybe even back up to 38.2s, that kind of thing. I don't know whether that can happen this year or not. But I don't know. I guess I'm thinking that we were, where's there's 2000 all the way up there. And this was very risk on kind of bet. And like we said, stock market went zooming up from 2000. If we go back to that 2-week chart, I think this was a very risk on bet. I actually get the feeling that maybe we have to do the exact opposite. So that sort of brings us to obviously the conversation that you guys are most interested in. Where does Bitcoin fall in all of this? Ironically enough, from 2000, right, there is that 2000 pivot over here, right? There is the, I'm not even quite sure if we have a, well, I guess there was a guy. I remember, shouldn't we debate the, mortgaging our kids' future to save the, shut the fuck up and give them the money, right? Give them the money, give them the money. Big push up. Typical crypto cycle. I think actually Bitcoin moves more on things like the short-term interest rate cycle versus that long bond. And if anything, if we want to follow short-term interest rates, since they killed the euro dollar contract, what we should probably be watching now is the 2-year bond. So this is sort of probably more relevant to sort of where short-term interest rates are going to be going here in the near term. I don't know whether we're really going to get much that's really useful here, but you can see bond prices here. This is where interest rates went really low. But then you're getting all this gobbledygook back and forth. I mean, how useful is that? We used to have such a great proxy on short-term interest rates, the euro dollar market. And they went and killed the euro dollar market. Although, there might be a good tool we can use. I was thinking about this the other day. The banker's acceptance might be an interesting one. I'm going to be working on that over the next little while. Whether I can correlate banker's acceptance, which is like a Canadian equivalent to euro dollar market. And actually that would make sense because the Rothschilds, I think they actually like to use Canada as sort of a proxy for their policy. And I believe that the Rothschilds, they have done everything they could possibly do over the past 100 years to dismantle this beautiful thing called the United States of America and the whole idea of a constitution and a set of rules and laws that you must be governed by. I might argue that in 1913, that was the initiation of the destruction of the United States of America and the creation of the U.S. Federal Reserve Board. And I actually might make the argument that it's actually the U.S. Federal Reserve Board who's running the country of the United States of America right now. And the democratically elected politicians have basically been made impotent. But anyway, that's another conversation for another day. So I would have ideally liked to use this 2-year note, but that's fucking useless. It's kind of actually interesting. I would really like to have like a 2-year futures contract or something that I could look at. But anyway, I'm wasting time now. Okay, so what I wanted to show you, but unfortunately I can't now, is interest rates, the short-term interest rates in particular. The Fed started to sort of wage war on the public and short-term interest rates right around the actual top of the market back there, end of 2001, 2022. I wonder if there's any way I can do this. There must be some way I can do this. Maybe let's go. Maybe even just looking at the Fed funds. That might even help us. I don't know. Let's see what happens if we do that. Oops, that didn't work. What is the futures contract for the Fed funds? ZQ? Oh, interesting. Hey, there we go. So I often talk to you guys about this moving in like a 4-year cycle. You can even put like a sine wave on this. Where's the sine wave? Sine wave, where are you, sine wave? Around here somewhere. There it is. So we'll put a top there. Oops. Come on, you. Yeah, something along those lines. It's not bad. Okay. So I might make the argument that I think we're actually going through a period very much like this. And keep in mind, this is the exact opposite. So if you see this moving up, then that means interest rates are falling. You see this moving down, then that means interest rates are rising. So obviously we just went through a massive rise in interest rates. I don't think we're ready to actually start turning the corner and them lowering rates. Usually the Fed, they don't really want to lower rates. They would actually prefer to keep rates relatively high. They will only lower rates when they have to, when they perceive that, oh boy, we better do something, or this system's going to break. Right? And that was all this. This was the sickness. Right through there, latter part of 2019, 2020. And then, of course, they panicked. And in early 2020, they just took rates right to zero, right? So you can see it turning there. Then sitting at zero, okay, yeah, I guess we do have a bit of a problem with inflation, and they just cranked rates up. So you could make the argument that as long as we're in this kind of environment, risk takers are going to be a little bit tepid. Right. And you might even make the argument, right, that started there in January, February, March of 2022. So if we go back to our stock market image, oh, did I get rid of it? Oh, darn, I did. Fudge. Yeah, I think I can just quickly do this. Oh, that's not what I wanted. Sorry, everyone. SPY. So when did we start topping out there? Notice January 2022. So hopefully you see the correlation. There's January 2022. Fed's like, oh, I guess we better start raising interest rates. And what does the stock market do? So it's interesting how the stock market itself has kind of said, well, I guess we're going to absorb this new paradigm of rising interest rates, higher costs of money. Um, Everybody and their brother got totally bailed out through here. So I think if anything, the stock market is now turned into an earnings engine. Do actual corporate earnings keep up with this new paradigm of higher interest rates? So it is interesting, ironically enough, no pun intended, how the stock market has actually done fairly well here, even though the Fed has been raising rates. Then we got into a period here, and I think this has got a little scary here. We got into a little period here where the market actually believed that we were going to actually start seeing lower short-term interest rates. And I don't think that this is actually warranted. I mean, if you actually look at interest rates themselves, they haven't actually turned. And again, I think that we're going to go through a period like this. So if you want to see what's going to happen in the stock market, my hunch is let's go back and look at what 2006 through 2007, what that window sort of looked like. And of course, that was heading into the fiasco of 2008. So I might make the argument, I've said this repeatedly. I don't think it's the United States that you have to worry about, but I could very easily see in a country like China. And I mean, what a great example of what a fucking con job this whole China's going to take over as the world's leading economy. And, the United States, the days of the US hegemony are over. I mean, you want to see a really, really good analogy of China? This is an absolutely perfect analogy of China. And what a fucking fraud the country of China really is. I mean, this is hilarious. It's absolutely hilarious. I've shown you images where, farmers are supposed to be green. So the local communist CCP official comes to inspect the local farms. And since they can't, or they won't go like row by row by row of the actual farms, what they do is they go up to the top of a local hill, or even, fly over in a helicopter. And the farmers literally take rebar, put like a little white cap on top of the rebar, hammer it into the ground, and then just sprinkle these all across their fields. So that when the CCP official looks at the field from like 10,000 feet up, 20,000, 30,000 feet up, whatever, it actually looks like a nice healthy crop. Maybe it's cotton that they're growing, but it's all a fraud. It's all absolute, utter fraud. That is the entire Chinese story, folks. Whether it be buildings that they built that will never get finished. And of course, the stupid suckers in the public, they've gone and bought these apartments. I think they said somewhere that they built so many buildings in China, they could literally house the entire population of the human planet Earth. Like all the starving people in Africa, they could all have a home. That's how many units that they built in China. Of course, there's no demand. And ironically enough, that with the laughable part about China, of course, is they did have 1 billion people in population. Turns out that actually the CCPs lied about that too. They way overstated their population. And now the scuttlebutt is that China actually, their population should shrink by about 300 or 400 million people over the next 10, 20 years. I've heard actually people say that the population regression in a country like China is actually going to be a worse effect than the Black Death in Europe. People go, for fun, go and look at how Europe did through the Black Death and how their economies did through the collapse in their populations through that. That's how bad this situation is going to be in China. So I might not, I mean, the whole idea of buying into this whole China is the next fucking superpower of the world. It's just utterly laughable the way that the public got sucked into that. And it's almost funny. If anything, the people that, there was these 4 entrepreneur guys that do these videos, that Chak Pak guy that everybody was all in love with. They were just absolutely in love with the whole China build out story. And, ironically enough, nobody ever held them to account of how horrible a prediction that was. But oh well, who cares? It's just money, right? But anyway, this is a great anecdote. Do yourself a favor. Chris showed me this, and I just couldn't help but laugh as I was reading through this story. It's just such a joke. Anyway, so the point here is I don't think that it's going to be the Americans that are actually going to have something break. Like this was through the Americans. And, through 2006, 2007, I was a retail stockbroker there. And I distinctly remember we used to talk to people. It wasn't a question of, did you own your own home? It was how many homes you owned. So the fraud was going on rampantly in the United States economy then. And of course, the end result of the whole fraud actually unwinding and the whole thing collapsing was, of course, we went into that decade or so of the United States basically just turtling, right? And, in reality, don't look at an image like this and think this is the US economy through that 2008. Because if you look at this, you go, wow, it looks like they're doing pretty well. But we all know that's a lie. The reality is that actually, they talk in Japan about the lost decade or lost decades. This is the same thing. This, my friends, I hate to say it, right? There's 2007. This is basically a lost decade. Nothing happened. What happened was that they hyperinflated the economy, printed money like it's going out of style. And as I said to you before, here your McDonald's Big Mac meal was maybe $8. And here now your Big Mac meal is $18. That's what's happened. Now, I might make the argument, and it's scary as hell for a country like China, because I might make the argument that it's not the United States that's going to go through this. Obviously, the world hegemony, their short-term interest rate policy will shift. If China, for example, the bubble finally bursts, and it turns out that the Canadian currency just absolutely goes into free fall, and they start calling us like a banana republic and stuff like that. But I might make the argument it's going to be China, it's going to be China, it's going to be probably, well, Australia. We know how bad that situation is. Anybody checked in on how bad the situation in fucking Vladiland is going these days? I've heard, of course, there too, that, of course, if Vladdy actually had to tell the truth, that you'd find out that the price inflation in Russia is just absolutely disaster right now. So, and I've warned you guys, actually, I've warned you all that since this 2018 pivot, all of the commodity countries of the world are absolutely toast. And of course, you see how disastrous the situation, standard of living wise. Of course, because the oligarchs own the stock and they own the housing and all that, they're not going to let those prices fall. But the standard of living, remember our McDonald's meal, that's the standard of living. We got to make sure that the Fakezi keeps going. So we're not going to show the public what's really happening. This is what we're going to show the public. Turns out it's business as usual. Everybody's getting rich. Well, are they? I don't know. Anyway, where was I? So the point I guess I'm trying to make with all of this, and I don't know, today's rant is an interesting one. I don't think that you're actually going to see too big of a move in U.S. short-term interest rate policy over the next little while. I think actually the U.S. economy is showing lots of signs of actually doing just fine. And there is no need for anybody in the U.S. to think about lowering interest rates. If anything, I think all of that is just sort of hopium by the market, trying to prop prices up. Where the hell's where's the newsletter? I got one of these windows I put the newsletter on. It's over here. Nope, that's not it. This is our funny little Solana. You poor Solana guys. Oh well. If anything, what you just saw happen on Solana, I think if anything is a really, really good anecdote for the end of a bull market. And keep in mind, Solana's done really, really well. I feel badly for the people that have come in and actually invested at the very end of this bull run here. Like this was our chart of the day here. You can clearly see where the W is. I mean, it's as plain as day. And of course, Brian likes W's, so that's where I bought. Unfortunately, this cycle, I got sucked into trying to do all this through DeFi and through the ledger, and it's actually been one hell of a headache. You can see that the price of this thing's actually gone way, way above my double level, but because of the fees on doing it through DeFi and all that, I have to actually see this price to actually get my double. And you can see it just popped up there very briefly. You can't work open orders on DeFi. You have to be there ready, willing, and able to pull the trigger. So I've got my alarm set. if this thing does go back up and test the high, then I will book that double. But anyway, it's just a really good example. Do you think Brian's going to come in and actually buy up top here? I mean, you guys tell me. I don't know. Have any of you been listening to me over the years? Would Brian endorse the idea of buying here? Probably not. And I might argue that you look at almost all of these cryptocurrencies, whether it be Bitcoin, same thing. I mean, is Brian going to endorse you coming in on the buy side and buying Bitcoins up here? Come on. If anything, what I need to see, and I actually do like this thinking, I need to see things like 50% retracements. I mean, ideally, if we could get a stab down into here, this is my buying window, cheap ass Brian. But I have a funny feeling we're not going to see that this cycle. I think this cycle actually is going to look a lot like the 2015 16 cycle bottom. I do think that we are coming up into an eclipse event. And it was interesting to see how Bitcoin acted through that last eclipse event. It was almost like the market was waiting for that eclipse event and then just took off like a rocket. You can see when the next eclipse event window is coming. And I have a feeling this is like a pivot. Why? Because it turns out that this eclipse event is like literally basically 1 month, maybe even a little less than that, ahead of the halving event. And I don't know whether you've seen in Bitcoin, but Bitcoin, and not necessarily just Bitcoin, but things like Litecoin, exact same thing. Litecoin absolutely loved, well, I mean, all, I don't know, I can't say all, but you know, these POW names. And we had a gentleman come on the site and actually did a fantastic job of sort of walking us through the Litecoin halving and his expectations. Turns out that it absolutely nailed his expectations, that we really shouldn't have seen that big of a rally in Litecoin. Like, when was the Litecoin halving event? Anybody have a date of that Litecoin halving event? I can't remember whether it was in November or whether it was in December, or maybe it was maybe it was actually over here. This might be been it. But anyway, I guess the point I'm trying to make, yeah, actually, maybe it was back here. Was it last summer? I think it was last summer, you know. This would actually make, yeah, this actually would make more sense, right? So I think the halving event was this event right here. And notice how they bid the price up prior to the halving event. August 2023. Thanks, Cotter. Yeah, so you can see I have August 2023. So this is actually what typically happens with crypto. And I remember in the 15-16 Litecoin halving event, they rallied the market up about a month or so ahead of the halving event. And there was some guy in China running a Ponzi scheme on Litecoin. It was hilarious. And then the market just collapsed and he got wiped out. And of course, typical. I mean, Chinese love to gamble. Don't get me wrong. They love to gamble. So, but the point here is you can see that Litecoin topped out in July and the halving event there was in August. And ironically enough, if you did like a fib from the top of the cycle, oh, look at where we bottomed out. What a surprise. So, I mean, I'm not necessarily predicting that this is what's going to happen with Bitcoin, but look how textbook this is. I mean, what letter of the alphabet is that? Happening all right through that reload zone. I mean, that is absolutely textbook. I mean, that is like, it's so textbook, it's almost cliche. Look at this beautiful market structure bottom. Big run up. Well, if we do dip back down into this structure, that's where I want to buy. And look at what happened here. I mean, this is just so beautiful. So would I expect to see something similar on Bitcoin? Well, we know that the halving event is coming up. We have a very important technical objective, 61.8 Mountain Man. Bitcoin really does like to top out into mountain man level prior to the halving event. I think I've shown you this on social media. I don't know what page it is, so it'll probably take me a half an hour to find it. But I tweeted this out about a month or so ago about how Bitcoin loves to top out into that 61.8 fib. Let's see, where was it? It was around here somewhere. Do 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 do. Around here somewhere. So I do like the idea that that's sort of our ultimate destination for this counter trend rally kind of move that we're going through on right now. I still think this is like your dead cat bounce phase of the market. I don't actually think we're in a new bull market yet. I think this is still us recovering from the previous bull. I don't know whether I can show you the damn chart or not. Might have been a year or two ago. Oh, where the hell is it? There it is. Well, just about as when I was about to give up. So you can see this example, and this is what I think we're replicating. I think we're gonna I think this was the summer action. Then we had the resolution through the summer. Then another final push up into we have this big Bitcoin ETF thing coming. Then you notice, there's the halving, and then this correction here from peak all the way down to here. Turns out that move from that low all the way up to that high, and that's what I've drawn here on the chart here for you right now. That's actually this 50% level. So that's what this move is here, doink back into 50%. And also notice too, that 50% doink event was basically a Wyckoff check of the original breakout level. So if we think about the same logic, I don't know where this top is. The top might be there, might be a little bit higher. I do like the idea that we're within spitting distance of this top. It's somewhere up and around here. We've got this institutional fingerprint right up top here, 61.8 fib. If we think of this as like an inverted head and shoulders, it's incredibly sloppy, but I actually think it is legitimate. Notice left shoulder, right shoulder are almost identical. Neckline's almost identical. So if we map that out, then there is the inverted head and shoulders objective right into this level here. So put it all together also too, a pretty compelling trend line that I think needs to be visited. 14 peak, the 17 peak. And it was interesting how the market did play with this level quite a bit through here. I could very easily see that the market has to come up and kiss this level again, play with it just like we did through here, through that event. And, you've got that big ETF event. And in the newsletter here, I mentioned that, we all remember what happened through that coin event. Now, do you think, right, we even said here, do you think that you're going to have a bunch of people in the public that really don't know what the fuck they're doing come in and buy the Bitcoin ETF listing on the date that it's listed? Do you think that Bitcoin ETF is going to be, I don't know, maybe encouraged to be very highly priced on that event? If the answer you're going to give me is no, then wow, have I ever got a bridge to sell you? Because I think that this is actually stunningly cliche. Question here is, where should I show you this? I guess, yeah, there it is. So, I mean, you all saw, if you don't learn from history, people, you're doomed to repeat it. This was basically the trap of all traps, if there ever was one. And I even know there were lots of people on the site that told me that, oh, yeah, well, I had a cousin of mine. He went and bought the Coinbase ETF or IPO because he thought it was just the next best thing since sliced bread. Right. How did that go? So I hate to say it, but I have a funny feeling they're setting us up for a real treat here on this Bitcoin ETF IPO listing. I don't know whether it's going to look like this, but I could very easily see it look like this. Also, too, I might even ask, what are the ETFs that are actually trading? What do they look like? So, here is the Canadian Bitcoin ETF that's been around already for a while. And notice that what they're going to do when they list this Bitcoin ETF, we can just do something as simple as, hey, how about one of those reload zones? And what's that fib level that Beamish guy, man, he absolutely loves when he sees price up there. I mean, I don't know. There is 61.8. And I get the impression that's probably what they're going to try and shoot for into this. And then, that sort of consolidation period where maybe you have bond prices actually go back down, interest rates go back up. I have a feeling that that's what this window is. So can you, like this inverted head and shoulders that you see on this chart, there to there to there, that target 61.8, that institutional fingerprint, the trend line. If you look at the ETF, this is an ETF that is actually trading right now. You can kind of see that same inverted head and shoulders pattern. So that's here to here to here to here to maybe up here to here to here. I could very easily see that. Wouldn't surprise me one bit. So that's kind of what I'm thinking. The ETF, and what a coincidence. We've got the halvening event also corresponding with that. And then we're going to get like a hangover. And this hangover period is what I'm worried about. And especially for things like altcoins, keep in mind when this thing is cleaning itself up, and gee whiz, look at those holes on the charts. Somebody tell me, what is the statistical probability? You all know the answer to this. What's the statistical probability that these holes on this price chart are filled in, i.e. gaps? You know what the statistical probability is. It's a pretty damn big number. So I'm worried that we sort of go through this period here right now, buy when it snows, right? This is the buy when it snows, sell when it goes. We're going to have the ETF. We're going to have the halvening event. This is all going to be like middle of April. We've got the eclipses to mark the celestial pivot. And then we're going to have to go through some poop. Now, whether it be the poop because of things like January barometer and people are scared crap about orange toupees coming back into power and more insurrections or whatever. Are we scared that, I think interest rates, we've gotten to the point now where we've actually gone down in the inflation conversation here for a while, but maybe could we go through a period where maybe bond prices actually go down, interest rates go up, and inflation starts to rear its ugly head again? I don't know. What's supposed to happen? Keep in mind, when this goes up, it means inflation is rising. When this goes down, it means inflation is falling. So what are we supposed to think if we see W's on our price charts? And remember, this is the market talking to us, not some politician, not some bureaucrat, not somebody who actually, like Peter or Fink guy. Of course, he talks up the electric vehicles because he's long a shitload of Tesla stock. Not because he thinks of the environment. That guy couldn't give a fuck about the environment. It's just, how do we get Tesla to go 100x? I know. Everybody in the world has to be obsessed about the fact that the world's coming to an end because we drive too many gasoline-powered cars. Everybody's got to buy a Tesla, right? That way the stock price goes up. Peter Fink makes a gazillion dollars. As soon as he starts lightening up on his position, he's hit his profit objective, all of a sudden BlackRock comes out and says, well, it's not BlackRock's responsibility to talk about ESG. That is about governments, and we will not make a comment about ESG anymore. Holy fucking corrupt world we live in, Batman. This is ridiculous. So don't listen to any of those people. Don't listen to the media because the media is owned by these people. Listen to the market. The market is speaking to you. The question is, are you actually going to listen? Frankly speaking, I have no idea whether you'll listen or not. But if you look at this image, we should actually expect inflation to start coming back on us here, folks. So put it all together. With this, if inflation started to come back, would that mean that bond yields start going up? And that means bond prices are going down. And if this is a risk on, risk off bet, then does that mean that risk on has to go down, stock prices have to go down? And is Bitcoin part of this risk on, risk off conversation? Does that mean Bitcoin prices have to start coming down too? So put it all together. I think you can start seeing the writing on the walls. I don't know whether I did a very good presentation of this, but especially when I look at something like this Bitcoin ETF and you see these gaps, I mean, is it really a smart idea to come in here on the buy side and risk your financial future chasing this market that's already gone up a bazillion gazillion? I mean, hell, look at the W's, people. You can see exactly where you were supposed to be a buyer. It's really obvious. So, I mean, I suppose this was the buy when it snows coming out of October there. Was that a pretty good trade? Yeah, it looks obviously hindsight. Yes, that was. But can you justify coming in on the buy side here now? I mean, come on. So the thing is I don't have a sell here yet. There is no top in the market. And it doesn't matter whether you're looking at existing ETFs or you're looking at things like the Bitcoin price itself. There is no top in the market yet. So now, if anything, this is, Brian just spent 2 hours telling you that if you want to buy, you really should just cool your jets. And things are going to get chaotic through here. We've got the big public event with the Bitcoin ETF. So the public is going to get super circle jerked here. They're going to, like, everybody in their media is going to be saying, you got to buy Bitcoins, you got to get long, you got to sink your money into this. But what you have to understand is that you are way late coming to the party buying. And as I said just a moment ago, what scares me here is not so much for Bitcoin. I don't think Bitcoin's going to go anywhere. But, a lot of these shit coins that people go piling into, to me, they're starting to look dangerous. And it's not really like they're outright sells yet, but we're just way, way too late to be considered buying. Like there's a lot of names that I would like to buy, like this RLC. Do you understand that this can happen at any given point in time to any of these names? This is obviously one that's breaking. And of course, if we do break down into reload zone neighborhoods, you know exactly where Brian's going to want to buy. And unfortunately, we're still not there yet. So there's Brian's favorite fib, and you can see how that's right off the W. So there's where Brian wants to buy 108, and here we are right now at 140. I still need to see this thing come down 30, 40 cents here before I'm even the slightest bit interested. And what worries me, of course, is not so much these kind of names, but like there's names that are running up right now. Look at this guy here. I mean, 78.6, 103. It's sitting at 184 right now. That is a hell of a lot of risk. You can see where the W is, and I'm more than happy to be a buyer down here. But there's no way in hell I can come in and buy that up there. And if I did buy this W, which of course I should have, why I didn't on this one, I don't know. I remember the whole site was uber bullish about this thing. Well, I should be, look at that, 98 cents. You tell me, what should I be doing here at $1.92? And does it make sense why this thing ran up to this level and then all of a sudden just stopped on a dime? You all should be able to answer this. And if you can't answer this, then get your butt into the education program and learn this stuff. This isn't rocket science. But what you have to understand is if you don't know the rules of the game, coming in and buying this here and expecting to double your money is actually not very realistic. And it's why most people fail at this game. They can't force themselves to come in and buy at the bottom ends of ranges when they see these W's appear. They come in after the fact, they chase, and they end up going, well, okay, I'll sell half on a double when it goes to $4 way up here. And at that point, oh boy, that's not very realistic of an objective. If anything, what I would say is just, now what you have to do is you have to have the patience and discipline to wait for this thing to come back down to earth. Anyway, blah, blah, blah. Okay, I've got about 20 minutes left. I don't know whether that was of any benefit to you. I was trying to just sort of be the voice of reason today. Hopefully, I gave you a pretty good idea based on just interest rates and risk on, risk off, why I'm thinking we're near the end of this move, not the beginning. Having said that, like I said, something like Bitcoin, I think once we're done this IPO, once we're done the halving event, then I will be looking for, at the bare minimum, 50% retracements, kind of like this image up here. And once we do get that event, I think what that does is it forces all of these names to come right back down to the bottom, and then I'll be right back in there buying everything back. But as long as we're still up top here like this, then I'm still in sort of the mindset of that little one that I showed you earlier, that I'm trying to take profits. I'm trying to bang out doubles. And actually, interestingly enough, over the past week or two, actually, I've banged out quite a few doubles on things like the stocks and stuff that I bought in the crypto space. So it really shouldn't surprise you if you hear that Brian's actually ringing the register. This is the one that I showed you earlier. I can't be a buyer there, and I don't want to hear anybody at TRI is buying 4.669 levels. You're an idiot if you're doing that. No offense, but you are. Anyway, it is what it is. All right, Chris was, and like I said, we've got a new school term coming up. If you really want to learn how to do this, just get your butt in the education program. And if you're like, Brian, I can't afford $1,000. I mean, frankly speaking, $1,000 is ridiculously cheap for this program. I mean, it could change your life. And it has changed a lot of people's lives. Just go and read all the testimonials about all these people that literally we've changed their lives. But we also have a raffle. So, Chris, do we have the link to the raffle just handy? Actually, you know what? I think even better, we put the link to the raffle right in the newsletter document here for you today. So you get it all in one full meal deal. So click here for a sign up to the Term 1 Q1 2024 school program. Just go and sign up for the raffle. We'll be having this raffle next weekend. So officially, we'll do the raffle next Sunday's show. And hell, we might change your life for free. Wouldn't that be a fun thing? So let's see if you can get yourself at least signed up for the raffle. And we'll do the big spin next Sunday's show. All right, Chris did tell me that, of course, we should have the links to all these in the description of the video today. Correct, sir? All right, so you can get the links to the newsletter. You can also, go on the YouTube page, this page and all that crap on YouTube, and get the links there. And as I said there a second ago, if you want to just come and learn a little bit about TRI, about the school program, about the changes that we've actually made in people's lives, come onto the website that the team has put together, and you can learn all about the school program. And I will say that I'm very, very pleased and proud of the work that the team has done. They've really put together a fantastic, very professional looking page here. I'm very proud of the team. I think they've done an excellent job here.
Also,
So,
Brian, don't
yep.
forget about the TRI meetup in El Salvador.
All right. Yeah, we
Shameless
should probably
plug.
also mention that. TBG, did we ever get a document that we can actually show people? Is TBG here? Yeah, he is there. Um, Chris, you created and where are we doing this? Are we, we have of course, this Discord channel. We got tons of different rooms here on the Discord. What room are you guys doing this? Are you doing it in the boot camp room, TBG? Yes, I posted the document in the members lounge. That's cool. But we should probably have I thought that we were going to do it in the little old lady room, but I've actually outsourced the meetup to a couple TRIOGers that were in the Portugal meetup, and I think highly of them. And actually, I've already sent TBG my deposit for the hotel rooms, so we're ready to go. All I got to do is just book the flights, and I also have to figure out. I think what I want to do is the beginning of February. I think I'm just going to hop in a car and I'm going to drive down, maybe take a week or so and drive down to LA and then maybe fly from LA down to El Salvador. El Salvador is where we're going to do the sort of meetup, but sort of hit a whole bunch of places. I would like to see all of our TRIers in Washington State. I'd like to see our TRIers in Oregon State. I'd like to see our TRIers in Northern California. I'd like to see our TRIers in Southern California. So I'm probably going to hit the road maybe like this first week of February, and then arrive in like El Salvador, maybe hop on the plane in LA like the 15th or something, and arrive in El Salvador on the 16th. I think that's when TBG has this planned. Let's see what he has here. So here is the meetup. Did we actually have dates on this? I'm not quite sure whether we want to do all that.
It's the
Uh,
16th through the 22nd, if I'm not mistaken.
right, yeah. So it doesn't really say on here. So probably a good idea, TBG, for you to at least put the date so people know exactly what the dates are. Oh, here we go. I see this 17th through the 18th. Oh, okay. Not quite sure how this works. Anyway, the meetup, I think we probably should put on here the specific dates. TBG says there's a new Google Doc, so this is an older one, I guess. So, Chris, can you maybe get that document from TBG? And if anything, TBG, I think what I want to do is I want you to come on the daily brief tomorrow, the after party, and talk us through what your plan is. Can you do that? Can you plan for that, please? All right. So, Chris, if you could make note in our daily brief document, the after party tomorrow, we're going to have TBG do a presentation. All right. And walk us through this. I mean, anybody who happens to be in Central America or in the neighborhood and you want to come and hang out with us, we're going to go just at least sample what El Salvador kind of looks like. And what the hell, we haven't done a meetup in a year or two since Portugal. So if you happen to be in the neighborhood, we'd love to see you. So anyway, come on the site tomorrow, and you can get more information from TBG directly. Okay, Chris said that there were a couple questions in the Q&A document, and I've got about 10 minutes before I have to hit the road. So let's try and get this done and get Brian on his way for Lily. Where are we here? So where is the AMA? There it is. Okay, so let's see what we got. And if I can't answer these questions fully here in the next 10 minutes, we'll just pick this up tomorrow in the after party. Alrighty. 1-7. All right. Number one. Hi, Brian. Can you please do an explanation and walkthrough of trading using the pump chaser zones? That's a bit too deep for conversation here for this Sunday show. Is this a trend continuation version of the 3-step setup? Yeah, well, I wouldn't say 3 steps. I'm a little unclear where and how to use this setup. Well, I mean, really think of trend continuation. That's a good way of thinking this. So what is the setup? And James, I don't know how long you've been on the site. Have you taken the education program? Maybe what you should do is take the level 1 education program. What I'm going to say here is, what is the setup we teach in the level 1 program to trade trend continuation patterns? And all of you on YouTube should be able to answer this question. Hell, you guys here in the lounge. So I don't know, you guys all, this is actually fairly straightforward. There you go. Michael nailed it. Way to go, Michael. You win the booby prize. The bot. So, and of course, the bot wants 33 to 66% correction. So think of the bot setup. If you get Collins pump chaser zone, and keep in mind, this is Collins' term. I've used it because, frankly speaking, I think it's a fun way of looking at the market. But the way that I would trade Collins pump chaser zone, if it's a bull market, even if it's something like Bitcoin, you could see if we get, you could consider the pump chaser zone as trade location for the bot. And if we got a nice little dip into here, then you'd know that we did at least 33%, which is probably like somewhere there. And 66 is somewhere there. So if we did a pullback into the pump chaser zone, and then we started to put in 3 higher lows and 3 higher highs, and you measured this out and you did the bot levels, that's probably a bot entry level there. And your target is like A to B, and then clone that and C to D. It's pretty straightforward. You want to sprinkle in, I want to see W's in my indicators, maybe even see a bullish divergence in my indicators through this event to set up this trend continuation setup. Okay, that you could argue is your 3-step setup. It's pretty straightforward. What I would say is this is a core concept of our level 1 program. And if you really want to get taught how to do this, then get your butt into the level 1 education program and you will learn toot sweet. All right. Number 2. Hi, Brian. I'm still struggling a bit with drawing a correct trend line so I can use the LJ setup. Can you please look at this chart and tell me if I've drawn it correctly? And frankly speaking, I like these kind of questions. So whoever asked up here, James, right? I would have rather you'd said, well, this is what I'm thinking about trading this Colin pump chaser zone. Am I correct? And that would have been a lot easier way for me to answer your question. So this is a chart here. 1, 2. Where's the third tag of this trend line? I suppose you could argue it here. That's not bad. This is irrelevant here to this trend line, though. I would also say, too, you could draw a trend line off of this high. Why didn't you draw a trend line off of here? And probably what this action right here is playing against is you could probably draw a trend line from here to here, and that probably intersects with that high there. So this move here and this little W that formed here is a function of this trend line break. Didn't really translate into much. And frankly speaking, I don't think it was really worth it. I would prefer, and of course, this is a conversation about what is a really good looking trend versus a, it's okay. This is, oh God, I can't even read what the hell that says. Does it say Zcash? Yeah, can't even see it. Where can we do that? Maybe over here. I think that said Zcash. I'm not sure. Something like that. Yeah, I think those are your three. All right. So I would say keep it really simple. This will not be a buy until you actually see a W on the other side of this trend line. Just that simple. Don't push this. Interesting how we're coming up here and then we're fading away. I suppose you could argue, okay, well, maybe that isn't acceptable. All right, so we have a break. Can I get a W on the other side of this? Where the hell's the damn W? Is that the W? Yeah, it's kind of sketchy. And then I suppose, like we said, you could have been really aggressive and done something like that. I just don't see anything here. So, David, that's you over there on YouTube. Is that you? Here's a really good example where we broke the trend line and you might have been suckered into thinking that this was the W that you want to take, and that's a trap. I hate when that happens. So, there is a really good example where you're like, well, Brian, that looks like a W. I want to buy that. And it's got the W has to be completely on the other side of the trend line. Sucks. I might argue that there was a cute little W here, but you might have also gone, well, let's go 1, 2, 3. There's your W. It's working its way up. Might also suggest that maybe you even use the W or the trend line range as sort of like your bounce. So notice, look how I think this came back to the 50% level. No, couldn't even make that. So here's a really good example where, just off of this range, I'm identified the trend, it's heading down. We have market structure validating, tried to break out. I love when you see this. If I was futures trading, I absolutely love hunting futures trades there. When you have a break of the trend line, then you come down and kiss the trend line from the other side. And I might argue that your trade, if there is one, is actually this event right there. Notice we come back down to the trend line, we rally away from it, we pull back, and we break out. So down, up, down, breakout. Or if you're a little bit more conservative, you'd say, well, you know what? I want to see a good looking up, down breakout. And even this didn't really work. Ironically enough, there's the low. Where the hell is that? I can't see where the lowest low is here. Where is it? It's right there, right? And look at that, how they came down and broke that. So here's a really good example where had you taken this W right here, you'd say, well, Brian, I do have a trend line break, 1, 2, 3. I do have a tag of the trend line from the other side. I do get a cute little W that's come out the other side. And I hate to say it, but I kind of think that that's your trade there. And let's see, do we get 2-1 on this thing? No, not even, not even close. I hate to say it, but this just looks like a failed trade. Simple as that. So, okay, we're working, and then puke out central. Boom. So stopped like a rented mule. So your chart here to here, where's the third tag? I don't see a third tag here. I don't know whether I even really like this as a trend line break. I would prefer that you had actually originally done this one. And what I would say is that down the road, if I was thinking about direction, I want to see this trend line broken, right? I would actually prefer to see it break up, then put in a nice W over here. And then I'd be like, all right, let's rock and roll. This here, this is the one that you drew. Boom, 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 boom. Maybe if we got a nice W come in like that. But the problem is any kind of rally, it's going to run into a major brick wall at that trend line. So I don't even really like this trade. I hate to say it, David. I think you're actually wise to draw it off of the original top And that's your resistance line. And everything here is just fluff until we actually get up, break that, put in a W and go. Which you're saying, well, Brian, I can't wait for that. That's like way over a year. Actually, when we go down to a daily chart, I think you can actually see the trade a little better here. So this was our 3-line break here. So we went from this high. You can even adjust this to that high there. There's the third tag. So 1, 2, 3. All right, can I have a W here, please? Boom. Where the hell's the damn W? Oh, there it is. Do you see that, David? That, I think, is actually your W that is the trade off of this trend line break right there. So do you think you could do that, David? Right. And interestingly enough, that was off of this range. There to there, 50% level. That I actually would think that that's a perfectly valid target. That's a 4.5 to 1 risk reward. So what I would say is, trading wise, that's at $25. Did we get the double to sell half on a double? No, nowhere even close. Did we get a 2 to 1 so that all the traders, they end up taking partial profits there? And then, so that means that's your double bottom right there. Look at that. Look how they even brought it right back down into the original double bottom there and gave you another opportunity to get in on a double bottom. So I think that's your trade. Be perfectly blunt right there. So there's your sort of sell half 2 to 1, move my stop to scratch, and boom, I'm stopped out at scratch on the remainder. It's all done. What do you think, David? Does that speak to your question? Do you see this? I'm not going to say this is easy. This is a tricky one. And I don't know whether it makes sense to actually use the weekly charts to draw these trend lines to set these trades up. Maybe start by drawing the weekly charts, then drill down to the daily chart and just see if you see any of these trend line setups, right? 1, 2, 3, that's the key. Then we want to see a W on the other side. I think this, as I said, if I was futures trading, I would be all over this right here. Inside bar reversal, came back down to the trend line, rejected the move below, and, just give me any reason to get long. Nice little inside bar there. Nice W there, then nice W within a W there. So I get the feeling any kind of buy setups over here would have been rock and roll off of the daily price chart. So what I'm going to do is I'm going to print this off and I'm just going to add this to your sheet that I actually think that this was the trade. And this is an example of one that, yeah, it did spit out a, 2 to 1. In fact, you might even say it got up to 3 to 1. Yep, there's 3 to 1 right up there. Got up against these old highs, that kind of thing. But oh my goodness. In fact, you probably should have seen this M and go, fuck, get me the hell out of there. I don't want to wait for scratch. This thing, in fact, actually the day that it confirmed that M, boom, it hit your scratch level. So you're stopped out on the remaining, boom, you're gone. So, but I think that if there was a trend line setup, that's it right there. So I'm going to put that in your document and I'm going to say, maybe drill down to dailies to see the trade. And I'm going to say, I see it something like this. All right, so I hope that helps. Okay, one more question. 5 minutes past the hour. All right, on a related note, here's an attempted LJ. Can you please let me know if this was executed correctly? Quick one from David. I'll just give you a yes or no. Boom, boom. Don't see that third trade. Hate to say it, but why didn't you draw here? One, two, and I think maybe it came through here. Three. What is this? Is this what the hell does that say? Chills? Is it me or are these very, very small prints? Look at that. I'm zooming in, but it's getting smaller. What the hell's going on? Okay. Maybe I'll just keep. Nope, no, look, it's going that way. All right, I have no idea. David CHZ, he says. All right, well, we'll finish off the video here with CHZ, and then I gotta get out of here. CHZ. C. Wow, look at that. Holy dyslexia, Batman. CHZ. Let's try that again. There we go. Perpetual futures con. Oh, goodness, what the hell is? You see what it says here? What does this say? Tether, Binance. You're looking at the weekly chart again. So I think that if you're looking for a trade, let's maybe drill down to the daily charts. USDT. Oh, well, this one's chill. There it is. What does that say? US dollar weekly on Coinbase. Oh, okay. Yep, you're right. USD on Coinbase. Boom. Okay. So let's see. I mean, hell, I can just see right here, right? I would just right off the bat, I'd go, okay, is that a setup? Look at what we did there, right? 1, 2, 3. Can I get a W on the other side of the trend line? I think that's actually a trade setup right there. And that did that hit 2 to 1? Yeah, it kind of looks like it. So just there to there. And oh, look at that. Did we get 2 to 1? We just missed. Oh, so close. I don't know whether I've done these numbers correct here. Mind you, you know what? There's probably your real W. But this is kind of sloppy. It's really, really big. But if you had taken it and said, well, Brian, this was the W that I found on this trend line break, I wouldn't scold you. Interesting how we just missed 2 to 1 on that thing, though, eh? Look at there's 2 to 1 right there. Oh, how frustrating. So anyway, that's a cute little one. Let's see. I think, you did the weekly chart, eh? Again, I don't know whether I would want to do the weeklies. I mean, unless it's like as plain as day. Gee whiz. What's that? Like the fall of 2022. That's awfully steep, for a trend line. So I guess that was this, eh? I don't know. I don't know whether I like that. I think you're being too aggressive. If anything, I'd almost prefer that you do this one here. I like that better, whatever the high is here. 14.3, 14.26. So yeah, 14.3. Yeah. And also too, just ask yourself, did price respect this trend line? Look how we went 1, 2, look how we came up here. And then 3. Okay, we broke it. Now, can I get a W on the other side? And if you did trade this 1, 2, 3, I think almost. Yeah, see, I don't know whether this even really set up very well because you can see we went through and made a lower low there. So I don't know. I'm not really the. If this was a clean W, then I'd be like, I think that was your trade there. But it doesn't look very clean. So this is your trade here that you had pointed out. Is that right? No, this is your trade here. Yeah, and I might actually argue when you go to the daily chart, I think that this is actually your more appropriate trend line there and then there. So boom, boom, boom. And then can I get a W on the other side of the trend line? So if I'm hunting, right, that's this. All right, nothing, nothing. Oh, there's a little bit of one there. So that might have been an entry for you. Looks like you got stopped out, jerks. Then there's another one here. Yeah, it's a bit sketchy. I don't know. I don't really see anything that's really getting my attention. That's a tough one. I don't even know if this is drawn correctly. That might actually be there to there to there. And then is this a higher high here? 14.26, 14.3. So I guess that is a higher high. Hate to say it, but when you see this, that means you can draw a trend line there to there. Ugh. So, man, there's a lot of trend lines here, right? There's also this one here, there to there. Yeah. So according to these, right, we didn't really break, and like, ugh, this is dirty, 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 dirty. So I don't even really see anything because we made a new low there, right? I mean, you might have said that that's a W, but that's a bit sketchy. I'm getting the impression, believe it or not, that this is actually your trade, right there. It's not something I would be overly excited about. Then I'd also might ask, what are the indicators looking like down here? Yeah, sloppy, sloppy. No man's land. A little bit of a W. I mean, you could have maybe justified Davos on that double bottom there. So if you really wanted to force the trade, I suppose, well, like I said, I like this one here. It's funny how I just missed that 2-1. It's funny, actually. Chris is now getting pretty familiar with my old boss, Johnny Hoagland. And he used to always say, if it comes within 5% of your price target, 10% of your price target, I just take profits. I don't know. I mean, I'm kind of like the school. I would prefer that you just wait for your level to get hit. But I suppose if we did get that close to your profit objective, you might be a little bit choked. Maybe I'm just on this M, you just walk away. That's a tough one. I'm not going to sugarcoat it. That's not easy. I got a funny feeling that this is the W that I'd be interested in because this did break to new lows. If this did not break to new lows, if we just held in there and then turned up, I probably would have said this whole W would have been the trade. That's not an easy one. It's not easy at all. So I can understand your confusion. This is pretty tricky. I don't know whether I really like this. I think I would have preferred you to have drawn a few trend lines. And I like this one to this one, and that high is a little bit higher, I guess. There to there to there, and that would have broken somewhere in here, and so you're hunting your longs over here. I mean, generally speaking, I think you're heading in the right direction, but I think I would have preferred you to have drawn this trend line because that M looks a little bit crisper than this one over here. If anything, I would almost say that we're well beyond this trend line. This trend line here is old. So ask yourself, are there any other downtrend lines that this market's working with? And, market structure itself validates the trend line. So the fact that we went through this low right there, that means this is a valid working trend line that off of there. Okay, I think I have to leave it at that. I'm actually 10 minutes late now for getting out the door. So thank heavens I'm already pretty and looking good for Lily. So I'm going to bid you all an awesome afternoon. Wish me luck with Lily on the road, and we have a safe and enjoyable afternoon. And Liam's in good spirits. I was very ranty today, sorry, but hopefully that conversation with you guys about interest rates and the perception of inflation going forward and how really I think the entire public has the whole thing completely wrong. I hope you found that of some value. Slow and steady wins a race. Remember, this is your hard-earned money. Mr. Fink wants you to go and buy Bitcoins up here. Keep in mind, we know where the smart money is buying. We know where the smart money is long, right? This is an ETF. I mean, you can see exactly where the smart money is long. Look at these W's. Do you really want to come in and buy here, or are you buying their sell orders? Use your brains here, people. Right? You have to force yourself as a smart money participant. You want to buy down markets and sell up markets. Can you do that? If you can't and you need help learning how to do it, that's the whole point of our education program. This is the whole point of me doing these free videos for you people. And if anybody who did ask a question here, like Jason or James, if you ask this and you don't feel like this is a good answer, just circle back around here and just say, Brian, can you do a follow-up in the after party show that's part of the site broadcast? I'll be happy to go through this in a little bit more detail in the after party site video tomorrow. I don't really want to walk through this step by step in the free public videos. Okay, have yourselves a great day, everybody. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take no wooden nickels. The only thing left for Brian to say at this point is, oh, and thank you very much, Chris, and the whole TRI team for supporting me in this endeavor. The only thing left for Brian to say at this point is, bye for now.